Good morning, students. Welcome you all once again in the revisionary classes organized by Board of Studies of ICAI. Students, today we are covering again one more asset-based standard, which is IND AS 105. And this standard talks about non-current asset held for sale and discontinued operations. As the name suggests, the title of the standard is non-current assets, which is held for sale and discontinued operations. Okay. So the title itself suggests that this standard captures those kind of assets which are non-current in nature and which are being held for sale, right? And this standard also covers discontinued operations. Okay. So friends, we'll cover one by one. So quickly, in the next half an hour, I'll set the context and then I'll move to the comprehensive questions. And through questions, again, I will reiterate or I will revise the concept. The objective of this index is to specify the accounting for asset held for sale and presentation and disclosure of discontinued operations. Okay. Scope. The classification and presentation requirement of this index applies to all recognized non-current assets and to all disposal group of the entity, right? And to all disposal group of the entity. Just a minute. I hope my screen is visible to everyone. Yes. So this standard is apply. So friends, as I told you, there are 4 pillars of accounting standard. What are those 4 pillars? Can anyone tell me what are those 4 pillars? RMPD, recognition, measurement, presentation, disclosure. So as far as classification and presentation is concerned, right? So this index applies to all recognized non-current asset and to all disposal group of the entity. So all recognized non-current asset, what is meant by all recognized non-current asset? Tell me who has the authority of classifying an asset or a liability into current and non-current, whether Ind AS 105 or Ind AS 1. Who has the authority? Ind AS 1 has the authority to classify the asset and liability between current and non-current, right? Ind AS 1 has the authority. Ind AS 105 is only applicable when the non-current assets, okay, are being held for sale. Just I'm asking a question. Maruti is manufacturing cars, okay, and Maruti is selling those cars to the customers. What is the nature of the car in the books of Maruti? And these cars are held for sale. So what is the nature of these cars in the books of Maruti? Inventory, current asset, right? It is an inventory, it is a current asset. So whether the sale of the car in the books of the Maruti, whether it will come under Ind AS 105 or Ind AS 2?
Ind AS 2.
Ind AS 2. Now the same Maruti sold 5 cars to TCS. TCS is an IT company. They sold 5 cars to TCS and TCS bought these cars for their top executives. And their top executives didn't like those cars. And now TCS is selling those cars. So what is the nature of these cars in the books of TCS when this car were acquired? PPE. When these cars were acquired, the nature of the car in the books of TCS was PPE, right? Property, plant and equipment. And PPE is a non-current asset, right? So now TCS wants to sell these cars. So will it classify as an inventory or it will be classified as Ind AS 105?
Ind AS 105.
Ind AS 105, not an inventory, right? Because the bread and butter of the TCS is not to sell the car. The TCS ordinary course of business is not to sell the cars. Their ordinary course of business is to provide IT services, sale of software, okay? So hence, when this PP, which is a non-current asset, being held for sale, it will be classified under Ind AS 105, okay? So the classification and presentation requirement of this Ind AS 105 applies to all recognized non-current asset into whole disposal group of the entity. But the measurement requirement of this Ind AS also apply to all recognized non-current asset in disposal group except some scoped out asset. There are some assets which are scoped out. Okay, means so measurement requirement of this Ind AS has a separate measurement requirement. Okay, so when a non-current asset or a disposal group is held for sale, when a non-current asset or disposal group is held for sale, so the measurement requirement of Ind AS 105 will be applicable to the asset, applicable to the non-current asset held for sale and to the asset of the disposal group also. Okay, but there are some assets on which the specific standard is applicable from the measurement perspective, not Ind AS 105. What are those assets? And this is an important aspect, right? Otherwise, you will get confused in the exam. Deferred tax asset. So deferred tax asset has to be measured as per Ind AS 12, not Ind AS 105. Okay. Asset arising from employee benefit. For example, there is a plan asset. Okay. It has to be measured as per Ind AS 19. Financial asset within the scope of Ind AS 109. Financial asset has to be measured as per Ind AS 109. Non-current asset that are measured at fair value less cost to sell in accordance with Ind AS 41 agriculture. Ind AS 41 asset. Contractual right under insurance contract as defined in Ind AS 104. So these are the assets which are measured even if these assets are part of disposal group held for sale. Still these assets are measured. These assets are measured as per the relevant standard, not as per the Ind AS 105. Okay. So as I told you, asset classified as non-current in accordance with Ind AS 1 shall not be reclassified as current asset until and unless it meet the held for sale criteria. So Ind AS 1 has told that property, plant and equipment, intangible asset, investment property, these are the non-current asset. Okay. So these assets will not be reclassified as current until and unless it meet the criteria of held for sale as per Ind AS 105. Okay. Asset of a class that an entity normally regard as non-current, okay, that are exclusively acquired with a view to resale shall not be reclassified as current until and unless it meet the held for sale criteria. So if you acquire a property and your intent is to sell the property, still you cannot reclassify that property as a current asset until and unless it meet the criteria of held for sale. Can anyone tell me what is the criteria of held for sale? I can ask this question. I have full right to ask this question because these are the revisionary classes. So can anyone tell me what is the criteria of held for sale? What is the criteria of held for sale?
Sir, it is available for immediate sale in present condition. And secondly, sale of such asset should be probable.
Highly probable.
Highly probable.
The
Yes.
probable word is used in Ind AS 37, but highly probable word is used in Ind AS 105, right? Like you
Yes.
said, like you used to say. So there is a probability that it will rain today. And you will say that there is high chances, high probability that it will be raining. It will be rain today, right? So friends, as he has rightly mentioned, there are two criteria. And for the quick remembrance, I always say there are two criteria, which is ISPC and HP. ISPC and HP. What is meant by ISPC and HP? What is meant by ISPC? Internet Service Provider Company. And what is meant by HP? Hindustan Petroleum. But is it the right? Is it the right full form in context of Ind AS 105? ISPC means immediate sale in present condition, and HP means highly probable, right? So an asset, I mean to say a non-current asset or disposal group will be classified as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through a continuing use. Friends, when you see the recognition condition of any asset, you know what is the first recognition condition? what is the first recognition condition? Future economic benefit should be probable. Future economic benefit. If you acquire a machinery, what is the nature of the machinery? Property, plant and equipment. Non-current assets, right? What is the future economic benefit from that machinery? What is
To
the future
produce for
economic
sale.
Sorry?
To produce for sale.
To produce goods.
The product for sale.
Okay. So basically to produce goods, normally if you acquire machinery, so the machinery used for production. Okay. If you acquire truck, if a company is acquiring truck, what is the future economic benefit arising out of the truck? Transportation. Transportation of goods, right? So every asset, when it is getting recognized, it should meet the criteria of future economic benefit. If an asset which is held for sale, a non-current asset which is held for sale, so what is the future economic benefit which can arise out of a non-current asset held for sale? How the future economic benefit will be arrived?
It can be sold and get the realization.
Yes. So future economic benefit of a non-current asset which is held for sale is primarily through a sale transaction, is primarily through a proceeds which is arising out of sale, right? So a non-current asset, for example, a building, a machinery which is held for sale, which is held for sale. The objective is not to use the building, use the machinery. The objective is to sell the building, sell the machinery. Is that clear? Okay. Sir, now what is held for sale criteria? Friends, let me also summarize. So this standard is covering three aspects. Now, aspect number one, individual asset held for sale. Aspect number two, disposal group held for sale. Aspect number three, discontinued operation. What is meant by individual asset held for sale? For example, I have a building, I have a factory building. Okay. So Abrakesh came to me and he asked, Sir, I have heard that you want to sell your factory. I told Abrakesh, no, I don't want to sell my factory. I only want to sell my factory building. Whatever is inside my factory, I will take away with me. So whether this factory building is an individual asset or is it a group of asset?
Individual.
This factory building is an individual asset. So this standard covers the aspect of individual asset held for sale, which is known as a non-current asset held for sale, which is known as a NCA HFS. Then Shweta came to me and she asked, Sir, I will give you a good amount of premium. Why don't you sell the entire factory as a whole? So she asked, Sir, what is there in the factory? I told her, my factory building, of course. I have some machinery. I have some raw material. I have some finished goods inventory. I have some furniture and fixture. Okay. I have some, computer software. I took a copyright also. So I told that these all items are there in my factory. She told me that I'll give you good amount of premium. Why don't you sell all these items to me? So I'm ready to sell her entire factory as a whole. So whether it is a individual asset held for sale or is it a group of asset held for sale?
Group of assets.
This is group of asset held for sale. This is known as a disposal group. Individual asset held for sale is known as a non-current asset held for sale. Group of asset held for sale is known as a disposal group held for sale, right? Then what happened? Then, I have two factories. Then Shilpa ma'am came to me. Shilpa ma'am came to me and she told that, Mr. Alok, why don't you sell both the factory to me? And I want you not to operate your business in Delhi, right? So she is ready to pay an hefty amount of premium to me. and I am selling both my factories to her, and I have also signed a contract that I'll not do the business in Delhi for at least next 10 years, right? The same line of business. So what is that? That is known as a discontinued operation. I'm just setting a context. Discontinued operations. Okay. So this standard is covering these three aspects. Now, what is held for sale criteria? As rightly mentioned by her, held for sale criteria, when two criteria is meeting, it is known as a held for sale. Number one, ISPC. The asset must be available for immediate sale in present condition and sale must be highly probable, right? Immediate sale in present condition means I want to sell my floor. I have 3-story building and I want to sell my third floor. I want to sell my third floor. Okay. Then what happened? When I want to sell my third floor, Ravi came to me, Ravi Jaiswal, and he asked me, Sir, would you like to sell your third floor? I told Ravi, yes, Ravi, I want to sell my third floor, but I will sell only when my fourth floor will get constructed. So I am asking two questions. Whether my floor is available for sale. Second question, whether my floor is available for immediate sale in present condition. Whether
Yes
my
and no.
floor is available for immediate sale in present condition.
Yes and no.
First yes, second no.
Yeah. Whether my floor is available for immediate sale in present condition. Answer
Yes.
is, but
No.
whether my floor is available for sale.
No.
Yes.
No or yes.
First वाला yes है, whether it is
What is
available
the what
for
was the sir, second part, sir?
in present.
So again, I am repeating a question. Question number one, whether my floor is available for sale. Question number two, whether my floor is available for immediate sale in present condition.
Question 1, yes. Question 2, no.
You're right. So as I told you that yes, I want to sell my third floor, but I will sell only when my fourth floor will get constructed. Okay. So in this case, yes, my floor is available for sale, but my floor is not available for immediate sale in present condition, right? So in the examination, at times when the question comes as a tricky question in this chapter, in this standard, so where the students got trapped, where the students are making mistake, they forgot to distinguish between the available for sale and available for immediate sale in present condition. My dear friends, if the question is only talking about available for sale and the question is silent, assume that it is available for immediate sale in present condition. If the question is asking about Ind AS 105, because if you will say that, no, I am assuming that if the question is on Ind AS 105, a full-fledged question, and the question is asking you to apply the concept of Ind AS 105, and the word written is only available for sale, and you will say that since it is available for sale and we are assuming that it is not available for immediate sale in present condition and hence 105 is not applicable, then you are not required to do anything. But the requirement was to apply the concept of Ind AS 105. Always remember, if the question is silent and it is talking about it is available for sale, you should assume that it is available for immediate sale in present condition. But the question is saying it is available for sale, but the question is hinting you, is giving one or two line where it indicates that it is not available for immediate sale in present condition. For example, the question says that the entity wants to sell the building and the building is available for sale. Then after one or two paragraph, one line may be written that, due to some requirement, the entity is ready and the entity will sell this building after 6 months. Okay. So in this case, this line indicates that while asset is available for sale, but it is not available for immediate sale in present condition. Okay. So you should always remember immediate sale in present condition. Immediate sale in present condition. Second example, I have a factory, okay, and I want to sell my factory. Saminath came to me and he told me that, sir, you want to sell your factory? I told him, I don't want to sell my factory right now because I have some pending buyer orders. Then he has given me an idea. He told me, why are you bothering about the buyer orders? Okay. You can just tell me the name of the buyers You can tell me the quantity, I will produce and I will supply them. Whatever is your profit margin, I'll give you. Okay. So I'm ready to sell my factory to Saminath in the same condition in which it is operating with the pending buyer orders. So whether this factory is available for immediate sale in present condition.
Yes.
Yes, it is available for immediate sale in present condition. प्रेजेंट कंडीशन मतलब जो भी कंडीशन है उसमें आप बेचने को तैयार हो. ओके. And whether this immediate sale in present condition means if whether it has to be immediately registered, transferred, money receipt, everything, or a customary time may be taken.
Customary time may be taken.
Yes, for example, if somebody is entering into sale or purchase of a property, of course, you need to make an agreement to sell. Then you need to get the registration done in the court of registrar, right? So all these formalities may take 2 months, 3 months, and generally in the property market, what happens in the property market? Generally, the seller gives 2 to 3 months time to the buyer. Generally, 90 days, 60 days time is there, 45 days time is there. Okay, so this is a customary time where the agreement to sell has happened, binding agreement has been made. Okay, so the first condition is available for immediate sale in present condition, and the second is sale is highly probable. When sale will be considered as a highly probable? When management is committed to a plan to sell the asset. Management is completely committed. Means they have already approved the sale plan in the board meeting. Active program to locate a buyer has been initiated. And the sale of the property or the sale of the factory listing has been done on 99acres.com, proptiger.com, and the company has also given the advertisement in the newspaper. So they have started searching a buyer. And this property is marketed for sale at a price which is reasonable in relation to the market value. For example, the market value of the property is 100 crores, but the entity wants to sell the property at 200 crores. Do you think that this sale will ever happen? Do you think that?
No, sir.
No, because nobody will buy at more than a market price. Okay. So the third condition, the market price, the sale price, the asking price, the sale price should be reasonable in comparison to market value. Sale should be expected to qualify for recognition as a complete sale within 1 year from the date of classification. So, if the examiner has to trap you in this question, so just in one line he will write, he will indicate that yes, asset is available for immediate sale in present condition, management is committed, then he will write the line. The price quoted by the company for the sale of the factory is significantly higher than the market value. What this line indicate? This line indicate that sale is not highly probable, right? Because if you are asking a price, it means you want to manipulate your books of accounts. You don't want to actually sell your asset, right? Yes or no?
Yes, sir.
Yeah. The fourth condition, sale should be expected to qualify for recognition as a complete sale within 1 year from the date of classification. Means you are also expecting that this sale will be completed, means concluded. See, ISPC gives you the intention and ability. ISPC gives you whether it is available for immediate sale in present condition. But sale is highly probable, provides you what? Execution. Execution. Management is committed. You started searching buyer. The price is normal. And you are also expecting with all your efforts that this sale will be completed within 1 year from the date of classification as held for sale. And the actions required to complete the plan indicate that the reversal of the plan is unlikely. that this plan will not change or withdrawn. Okay. So if you go to the detailed video on Ind AS 105, I have also shown you the annual report, how the companies are dealing it practically. I have also shown you the annual report of Hindalco Industries Limited and Ultratech Cements Limited, right? So are you clear on the ISPC and HP? Yes, is it clear? Clear or clear?
Clear, sir.
Clear. Okay. So let me ask one more questions. One more question. Let's say the factory is available for sale in present condition. It is available for immediate sale in present condition. The management has also approved the sale plan in the board meeting. Okay. The buyer searching has already started, and the buyer has also clocked. Buyer bhi mil gaya. The price is normal. The management is expecting that yes, the entire deal will be concluded within 1 year. And there is no, it is unlikely that this plan of sale will change. It is unlikely. Now, when the deal was happening, after 8 months, okay, COVID came. And due to COVID, all these registration offices, the registrar office, okay, where the property registrations are happening, all these courts were closed for let's say 1 year. And this transfer of property get delayed. Okay, the sale will get delayed. In that case, whether it will meet the high probable criteria or not, because it is going beyond 1 year.
Yes, sir.
Yes,
Yes.
sir.
Why?
Because it is
Not
not
within
within the
control.
control of the company or anybody.
Yes. So standard says that while the limit is 1 year, your sales should be expected to complete within 1 year. But there are two conditions where even if it will go beyond 1 year, still it will continue to be classified as a non-current asset held for sale. Okay. Still, it will meet the criteria of held for sale. What are those two conditions? What are those two conditions? Those two conditions are condition number one. Okay. So of course, it should beyond the control of the entity. And though there are two conditions, there are two situations. Situation number one, unexpected circumstances delayed the sale or disposal of asset or disposal group held for sale, like COVID, natural calamities, so regulatory restrictions. So these are the unexpected circumstances. Second, unexpected condition is imposed by the buyer or the third party after the firm purchase commitment is obtained. What is meant by firm purchase commitment? Firm purchase commitment means binding agreement, right? So if any party who will walk away from the agreement, that party is supposed to bear the penalty. That party is supposed to bear the penalty. Okay. So for example, once the deal was closed, the buyer told that, can you please get this factory cleaned up? Deal was closed means when the agreement to sell has signed, non-binding agreement to sell has signed. Okay. So buyer asked the seller, can you please get this factory clean? So the seller told, if I will clean this factory, it will take at least 1.5 years. So buyer told, no problem. Please do that. So in this case, this is the condition which is imposed by the buyer. There is a non-binding agreement which is signed. So while it is going beyond 1 year, still it will continue to classify as held for sale. Clear? In such circumstances, asset or disposal will classify as held for sale. Is this clear or not clear? Clear?
Yes, sir.
Okay. So now quickly, I'll take you. So I have completed the recognition criteria. Now I'm quickly taking you to the measurement criteria. Okay. Measurement. I hope my Excel file is visible to everyone. Is it visible or not visible? Is it visible?
Yes, sir.
Visible.
Measurement provision of Ind AS 105. Step number one. So when once an asset is classified as held for sale, right? So now you have to measure that asset as per Ind AS 105. What is the measurement criteria? Step number one. You need to compute the carrying value of that asset as per the respective standard on the date of classification as held for sale. Immediately before classification is held for sale, you have to compute the carrying value of the non-current asset or disposal group as per the respective standard. For example, a building is classified as held for sale on 1st July. So you need to compute the carrying value of that building as per Ind AS 16 property, plant and equipment. Okay. What is the formula of the carrying value as per Ind AS 16? What is the formula of carrying value?
Cost minus accumulated depreciation minus accumulated impairment loss.
Very good. Cost minus accumulated depreciation minus accumulated impairment losses. Always remember this formula. Always remember. Okay. This formula will help you in 4-5 standards. Cost minus accumulated depreciation minus accumulated impairment losses. Okay. So you have computed the carrying value on 30th June. Now, on the date of classification is held for sale, you need to compute fair value less cost to sale. Okay. For example, the carrying value as per the respective standard, I mean to say Ind AS 16, is 1 lakh rupee. And the fair value less cost to sell is 90,000 rupees. So you have engaged the valuer. The valuer has given you the market value of 1,20,000, and he has also suggested that the cost to sell of this property will be 30,000 rupees. So what is my fair value less cost to sell? 90,000 rupees. Okay. What is my carrying value as per the respective standard? 1 lakh rupee. At what value this NCA HFS will be recognized or DGHFS will be recognized?
90,000.
90,000 being lower of step number 1 and step number 2. Lower of carrying value and fair value less cost to sell, right? So if it has to be lower, but the carrying value in the books is 1 lakh rupee and you are recognizing non-current asset held for sale at 90,000 rupees. You are crediting your PPE by 1 lakh. You are debiting your NCHFS by 90,000. Where 10,000 difference will go?
Impairment loss.
Impairment loss on reclassification as NCA HFS. Impairment loss on reclassification as NCA HFS. Is that clear? ये clear हो गया?
Yes, sir.
So quickly we'll see this example. A Limited purchased a building on 1st April 19 for rupees 20 lakhs. The useful life of the building is 10 years. Assume no residual value. What is the depreciation per annum?
2 lakhs.
2 lakh rupees. The building has been classified as HFS on 1st July 2020. It was purchased on 1st April 19. It means after 1 year, 3 months. You are required to show the necessary entries for this effect. The fair value less cost to sell on 1st July is 16 lakh. So building is 20 lakh. Useful life is 10 years. Per annum depreciation is 2 lakh. Date of purchase 1st April 19. Date of classification as HFS 1st July 20. Fair value less cost to sell on 1st July 20 is 16 lakh. So what is the step number 1? What is step number 1? Compute the carrying value on 30th June as per the respective standard. So what is the formula of carrying value? Cost minus accumulated depreciation minus accumulated impairment losses. Cost is 20 lakh. What is accumulated depreciation? 2 lakh for 1920 and 50,000 for 3 months of 2021. Carrying value is 17.5 lakh. Fair value less cost to sell is 16 lakh. So what is lower? 17.5 or 16? Lower is 16 lakh. NCHFS is measured at 16 lakh. What is the accounting entry? When the building was purchased, accounting entry was building PP account debit to bank. Can you mute yourself? So somebody has unmuted. Okay. Yes. So when you charge depreciation, what is the accounting entry? Deb to ECDEB. Okay. Deb to ECDEB. Right? So when you classify PP to NCHFS, what is the accounting entry? NCHFS building account debit Impairment loss on reclassification debit into the P&L. And to building PP 17.5 lakh. Okay. Is that clear? So this was the initial measurement. Now what is subsequent measurement? What is subsequent measurement? So let me also give you subsequent measurement. Okay. So here, so let's see example number 2 also. A Limited purchased a building on 1st April 2019 for 20 lakhs. Useful life of the building is 10 years, assuming no residual value. There is an impairment loss on this building as on 31st March 2020 for rupees 1 lakh. The building has been classified as HFS on 1st July 20. You are required to show the necessary entries for this effect. Fair value less cost to sell is 16 lakh. What is the cost of the building? 20. Useful life 10. Per annum depreciation 2 lakh. Impairment loss 1 lakh. Okay. What is the first entry? Building to bank 20 lakhs. Depreciation to except 2 lakh. Then there is an impairment loss of 1 lakh also. So impairment loss debit to building 1 lakh. Now what is the carrying value on 31st March 20?
17 lakhs.
Now what is the 3-month depreciation? So you need to charge depreciation up to 30th June 2020 to arrive at a carrying value immediately before classification is held for sale. So how to compute depreciation for next 3 months?
On
So what is the
17
remaining
lakhs.
life? 9 years. So 17 divided by 9 multiply by 3 by 12. सही है ना ये? जो भी
Yes, sir.
कैरिंग वैल्यू होती है आप डेप्रिसिएशन प्रोस्पेक्टिवली चार्ज करते हो ना, कैरिंग अमाउंट डिवाइड बाय रिमेनिंग लाइफ. Otherwise, what happen? If you will charge 2 lakh rupee depreciation for next 9 years, what will happen? Carrying amount is 17 lakh and depreciation will be 18 lakh. 1 lakh का तो आप पहले चार्ज कर चुके ना एक्स्ट्रा.
Yes,
क्लियर
sir.
है?
Yes, clear in mind.
Yes, clear in mind. So carrying value of PPE is 16.53 as on 30th June 20, immediately before classification is held for sale. And what is my fair value less cost to sell? 16 lakh. So accounting entry, NCHFS, building account debit 16, to building PP credit 16.53, impairment loss 0.53, right? So on this building, what is the total impairment loss on this building? Total impairment loss कितना हुआ इस बिल्डिंग में?
1.53 lakhs.
1.53. 1 lakh when it was PP, 0.53 when it was reclassified to NCHFS. Okay. So step 1, we understood. What is my step number 1? Depreciation 2 lakh, 1 lakh impairment, 0.47, 3 months depreciation. This is this thing. Yes. So now go to the subsequent measurement. Subsequent measurement. Okay. So what is the measurement requirement if the building has not been sold till 31st March 2021? Okay. This building was classified as held for sale on 1st July 20, but this building was unsold till 31st March 2021. What happened then? So in case of subsequent measurement, standard says that subsequently you have to remeasure this building at this NCHFS at fair value less cost to sale. Again, आपको क्या दोबारा कैरिंग वैल्यू निकालनी है क्या? It is no more PPE now. It is now NCHFS. Now you have to again remeasure this NCHFS or DGHFS at fair value less cost to sale. For example, let's discuss this example again. A Limited purchased a building on 1st April 19 for rupees 20 lakh. Useful life of the building is 10 years, assuming no residual value. Impairment loss 1 lakh. अभी जो हमने देखा था. Building has been reclassified as HFS on 1st July 20. Fair value less cost to sell 16 lakh. Asset has not been sold out till 31st March 21. You are required to show the necessary entries for this effect in the following cases. Case number 1. The fair value less cost to sell on 31st March 21 is 15 lakh. Number 2. It is on 18 lakhs. Number 3. On 31st March 21 it is 17 lakh. Okay. So in the first case, fair value less cost to sell on 31st March 21 is 15 lakh. What was the initial measurement in this question? What was the initial measurement of NCHFS?
16 lakhs.
16 lakh. Okay. So NCHFS on 1st July 2016 lakh. On 31st March 21, it has to be remeasured and stated at fair value less cost to sale. Okay. So on 31st March 21, it become 15 lakh. What should we do? It become 15 lakh. What should we do? क्या
1
करेंगे?
lakh,
16 का 15 हो गया.
1 lakh more transfer to impairment loss.
1 lakh more impairment loss has to be charged. Accounting entry. Impairment loss on remeasurement of NCHFS account debit to NCHFS. And now the carrying value becomes, carrying amount of NCHFS become 15 lakh. Situation number 2. When this fair value less cost to sell is 18 lakh. क्या हुआ? बढ़ गया. कितने से बढ़ गया? What was my
2 lakhs.
measurement of NCHFS? 16 lakh. Now it become 18 lakh. 2 lakh से बढ़ गया. So what should we do?
Nothing.
पहले का इम्पेयरमेंट लॉस तक, पहले के इम्पेयरमेंट लॉस तक उसको इंक्रीज कर लेंगे और बाकी का रिवैल्यूएशन सरप्लस.
Nothing, sir, because fair value or carrying cost, whichever is less, is to be considered.
So Abrikesh, the concept of carrying amount and fair value less cost to sell, whichever is lower, it is applicable only at the time of initial measurement.
Okay, fine.
Okay? And that carrying amount is not as per Ind AS 105. That carrying amount is as per the respective standard. So standard
Yes.
says that since you are transferring your non-current asset held for sale as a, you are transferring your non-current asset held for sale as a, sorry, you are transferring your non-current asset as a non-current asset held for sale. So it says that immediately before classification as a held for sale, you need to compute the carrying value as per the old standard. Old standard means Ind AS 16, 38 और 40. जो भी asset है उसके हिसाब से आप करोगे. Okay. So once you arrive at the carrying amount, carrying value as per the respective standard, immediately before classification is held for sale, right? Then you need to compute fair value less cost to sell. Whatever is the lower value, that value becomes the value of NCHFS or DGH.
Okay, got it, sir. Thank you.
Right? But subsequently, standard only talks about you have to remeasure at fair value less cost to sell. Remeasure. So when I'm remeasuring my fair value less cost to sell, this value of the building becomes 18 lakh. And we have initially measured at 16 lakh. It becomes 18 lakh now. So whether I should reverse my impairment loss, whether I should recognize a gain of rupees 2 lakh, my question is that.
Reverse the impairment loss to the extent of available balance, that is 1.53 lakhs.
Yes, so standard says that whenever there is an increase in the fair value less cost to sell, you need to recognize the increase only to the extent of previous cumulative impairment losses. What are the previous cumulative impairment losses? Previous cumulative impairment losses means all the impairment losses, all the unutilized impairment losses, all the unadjusted impairment losses during the lifetime of this asset. So इस asset पे impairment loss कब हुआ? When it was a PPE, तब 31st March 20 को 1 lakh का हुआ. When it has reclassified to NCHFS, तब 0.53 का हुआ. तो total 1.53 हुआ. So in this case, during the life, this impairment losses during the life of the PPE 1 lakh. At the time of initial measurement as NCHFS, it is 0.53. Okay. So 1.53 is the total impairment loss, previous cumulative impairment loss. So to the extent of only 1.53, you will debit your asset NCHFS and you will credit the impairment gain, impairment reversal. Okay. What is the carrying amount of NCHFS on 31st March 21? 17.53 lakhs. Okay. Is that clear? याद रहेगा हमेशा. So this is the thing where students are making mistake, because carrying, what is the meaning of carrying value? Carrying value का मतलब क्या होता है? I'm not asking formula. I'm asking English to Hindi.
What
जिस
is
वैल्यू पे
what?
जिस वैल्यू पे एसेट को कैरी किया जाए, यही मतलब होता है कैरिंग वैल्यू का.
Yes, balance carried forward.
Balance carried forward. Okay, brought down, carried forward. So the value at which the balance is carried, that is known as carried amount, that is known as carrying amount, carrying value. So if NCHFS is an asset, नॉन करंट एसेट, हेल्ड फॉर सेल भी तो एसेट है ना, तो बैलेंस शीट पे जो भी बुक्स ऑफ अकाउंट्स में नंबर आ रहे हैं, दैट इज द कैरिंग अमाउंट ऑफ दैट एनसीएचएफएस. सो डोंट थिंक दैट कैरिंग अमाउंट लिखा है इसका मतलब तो है कि कॉस्ट माइनस एक्यूमुलेटेड डेप्रिसिएशन माइनस एक्यूमुलेटेड इंपेयरमेंट लॉसेस. राइट, डोंट गेट कंफ्यूज्ड विद द इनिशियल मेजरमेंट. कैरिंग अमाउंट तो हर किसी का होता है. कैश बैलेंस एज अ कैरिंग अमाउंट, बैंक बैलेंस एज अ कैरिंग अमाउंट. ओके, सो तो क्वेश्चन में आपको कंफ्यूज करने के लिए लिखा होगा दैट मस्ट बी रिटन इन द क्वेश्चन that the carrying amount as on 31st March 2020 of the NCHFS is 16 lakh and the fair value less cost to sell is 18 lakh. Right, so don't get confused. ये तो ऑलरेडी एनसीएचएफएस हो चुका है, उसका कैरिंग अमाउंट दिया है. ओके, so in that case don't apply the lower formula. I am just preparing you so that you will not make a mistake in the exam. Okay, and in CA final the question comes as a very practically, right? Or the questions are not only theoretical, it comes from the practical mindset also. Okay, is that clear? So what is my carrying value of NCHFS on 31st March 21? 17.53. Now one of the student was telling, sir, the balance will go to the revaluation surplus. Again I am telling you, you are in Ind AS 105. You are in Ind AS 105. In Ind AS 105, there is no any concept of revaluation surplus. No any concept of revaluation surplus. Okay. So don't apply one concept to every place. Don't apply that. Right. So revaluation surplus concept only exists in two standards. Which two standard? Which two standard? Tangible asset and intangible asset. Property, plant and equipment and intangible asset. Ind AS 16 and Ind AS 38. Right? Is that clear? Situation number 3. Fair value less cost to sell is 17 lakh. अब क्या करेंगे? एनसीएचएफएस की वैल्यू 16 लाख है, फेयर वैल्यू लेस कॉस्ट टू सेल 17 लाख है. अगेन recognize the increase to the extent of previous cumulative impairment losses. NCHFS to impairment gain, carrying value is 17 lakh as on 31st March 21. Okay, I hope the measurement part is clear to each and every one of you.
Yes, sir. Clear to me.
What about others?
Yes, sir. Clear.
Okay, so now I'm moving to some ICAI questions, right, which the Board of Studies has shared with me. So let me share my screen. Please confirm if this screen is visible. Word file is visible. Please confirm.
Visible.
Visible? Okay. I'm starting with the last question. Question number 6. Yes. Are you able to see this question? A
Yes, sir.
freehold property was originally acquired for rupees 40 lakhs. Okay. A freehold property was acquired for 40 lakhs. What is the nature of this property? Non-current asset, property, plant and equipment. Some years later, after cumulative depreciation of 11 lakh has been recognized, an impairment loss of 3,50,000 is recognized, taking the carrying amount of 25,50,000. So 40 lakh is the cost, accumulated depreciation 11 lakh, impairment loss 3.5. So 11, 3, 14.5, 25.5, which represent the estimated value in use of the property. Okay. Shortly thereafter, as a consequence of a proposed move to the new premises, the freehold property is classified as held for sale. At the time of classification is held for sale, what is the carrying amount?
25 lakh 50,000. 25 lakh 50,000.
25.5 लाख। एंड ये वाला कैरिंग अमाउंट कौन सा है? ये एच पर, ये कौन सा कैरिंग अमाउंट है?
ओरिजिनल कैरिंग अमाउंट।
एच पर इंड एस 16 ओरिजिनल कैरिंग अमाउंट है, एच पर इंड एस 16, जिसका मतलब है कॉस्ट माइनस
Depreciation minus impairment loss.
cost minus accumulated depreciation minus accumulated impairment loss. Very good. Fair value less cost to sell is assessed at 25 lakh. Carrying amount is 25.5 lakh. Fair value less cost to sell is 25 lakh. Right? So what is lower? In दोनों में से what is lower?
25 lakhs.
25 lakh is lower. Okay. So what is the accounting entry? क्या अकाउंटिंग एंट्री होगी?
NCHS account debit 25 lakh, impairment loss 50,000, and two property plant equipment 25 lakh 50,000.
Okay. So whether depreciation will be charged once an asset will be classified as held for sale, and let's say the actual sale happened after 9 months. So whether depreciation will be charged?
No, sir.
No.
Yes, it.
Yes. So once an asset will be classified as held for sale, no depreciation is required to be charged. No depreciation, no amortization. Okay. So very good. Non-current asset held for sale 25 lakh to PP 25.5 lakh. The differential of 50,000 will go to impairment loss. So in this case, up to this level, what is the total impairment loss? What is the total impairment loss? Friends, just allow me.
4 lakh.
4
4
lakhs.
lakh.
4 lakh is the impairment loss. Very good. Yes, 4 lakh is the impairment loss. Very good. At the next reporting date, the property market has improved and fair value less cost to sell is reassessed at 26.5 lakh. अब रिपोर्टिंग डेट पे, अब राकेश, व्हाट इज द फॉर्मूला फॉर रिपोर्टिंग डेट? किस पे मेजर करेंगे इस एनसीएचएफएस को?
Fair value less cost to sell.
Fair value less cost to sell. Carrying amount and fair value less cost to sell, that was only applicable for initial measurement. Now at the subsequent measurement, you have to remeasure your non-current asset held for sale at fair value less cost to sell. And what is the fair value less cost to sell? 26.5 lakh. What was the value of NCHFS? 25 lakh. So there is an increase of 1.5 lakh. Should I recognize the increase or not?
Yes, sir.
Yes.
To the extent of 50,000.
To the extent
No,
of
sir.
only 50,000. Okay.
No, sir.
No,
To
no,
the
no,
extent
sir.
directly 1,50,000.
The extent of 4 lakh.
Hmm.
This time 1,50,000 you can.
Okay. So, Abrikis, why you are saying only to the extent of 50,000?
Oh, sorry. It's okay. By mistake, it just slips.
Okay, no problem. So my intent is not to, highlight. My intent is to,
Yeah, I agree,
clear
sir.
the concept, right?
Yes, yes.
Is to clear the concept. So, the word uses previous cumulative impairment losses. Cumulative का मतलब उस एसेट पे लाइफ टाइम में जो भी impairment losses रहे हैं,
Yes, yes.
right? Unadjusted. Why I'm using the word unadjusted? Because let's say when it was PP, and when it was PP, if the revaluation model was opted, जब ये PP था, अगर revaluation model opt किया था, okay, and at time there was a revaluation surplus, subsequently there was an impairment loss, and that impairment loss was adjusted from revaluation surplus, तो वो वाला impairment loss नहीं लेना. क्यों नहीं लेना? क्योंकि वो तो कभी P&L में गया ही नहीं. Are you getting me?
Yes.
Yeah. So let's say if it was a PP and PP revaluation model was opted, there was a revaluation surplus of 2 lakh rupees. I'm assuming. So when there is a revaluation surplus, where the revaluation surplus will go? OCI or P&L? OCI और P&L? रिवैल्यूएशन सरप्लस कहाँ जाता है पीपी?
P&L.
OCI.
OCI, अदर कॉम्प्रिहेंसिव इनकम में जाता है. So the revaluation surplus is 2 lakh in OCI. Subsequently, there is an impairment of 1.5 lakh. So where that impairment will be adjusted? P&L, or it has to be adjusted from OCI, from the revaluation surplus?
OCI.
OCI, revaluation surplus से adjust होगा. It has to be adjusted from the revaluation surplus. Okay? तो वो impairment loss तो कभी P&L में गया ही नहीं. So when you solve the question in exam, your concept should be clear. Very much clear. You have to think about what is the intent. Okay, the intent is to, for whatever amount you have debited your P&L, you have debited your P&L, whatever amount for which you have debited your P&L net to the extent of cumulative impairment losses. To only that extent, if there is an increase, you can recognize the increase. Okay, so इस केस में क्या होगा? इस केस में क्या होगा? इस केस में 1.5 lakh you can recognize. 1.5 lakh gain you can recognize. Okay, 1.5 lakh rupees of gain you can recognize, right? Then what happened? अब क्या होगा उसके बाद? 6 months after that, the property market has continued to improve and fair value less cost to sell is assessed at 30 lakh rupees. From 26.5, now it become 30. So can I recognize a further gain of 3.5 lakh?
Only 2.5.
And how have you computed only 2.5?
4 minus 1.5.
Yes. The previous cumulative impairment losses is 4 lakh. 3.5 plus 0.5. Out of 4 lakh, we have already reversed 1.5 lakh. Okay. So now the remaining 2.5 lakh we can reverse, right? Remaining 2.5 lakh we can reverse. So we cannot reverse entire 3.5. We can only reverse to the extent of 2.5. Now, what is the carrying amount of this PP of this NCHFS? After reversal, what will be the carrying amount of this NCHFS? 26.5 में 2.5 का आप रिवर्सल कर दोगे इम्पेयरमेंट लॉस का, तो एंट्री क्या पास करोगे? एनसीएचएफएस अकाउंट डेबिट टू इम्पेयरमेंट गेन. NCHFS account debit to impairment gain. Okay. Right. NCHFS account debit to impairment gain. 29 lakh. So NCHFS account debit 2.5 lakh, impairment gain 2.5 lakh. I hope this is clear to everyone.
Yes, sir.
This is what as an answer is given. The initial write down or classification as held for sale is rupees 50,000 and the property is carried at 25 lakh. Okay. Following classification is held for sale, no further depreciation is recognized. At the next reporting date, the market is improved and the fair value less cost to sell is 26.5. The gain of 1.5 is less than the cumulative impairment losses recognized to date. Okay. Accordingly, it is credited to profit and loss and the property is carried at 26.5 lakh. 6 months after, when the property market has improved, the fair value less cost to sell is now 30 lakh. This further gain of 3.5 lakh is, however, in excess of the cumulative impairment losses recognized to date. 3.5 plus 5.5 minus 1.5 is equal to 2.5. Accordingly, a restricted gain of 2.5 lakh is credited in profit or loss and the property is carried at 29 lakh. Subsequently, the property is sold for 30 lakh, at which one-time gain of 1 lakh is recognized. Okay. Is that clear?
Yes.
Clear? While in the question, it is silent that whether the property is sold out or not. Okay. Have you seen any line in the question which says that the property has actually been sold out?
Last line. नहीं नहीं.
Where it is written?
No,
It
it's
is
not there.
not
It's
written.
not there.
It's not there. So the question is assumed. Okay. But even though if you will not assume, that is okay. Even if you will stop up to 29 lakh, that is okay. You will get the full marks. Okay. But if the question would have asked, determine the amount of gain or loss at different point of time and its treatment including the sale transaction, then you can assuming the property has been sold at 30 lakh rupees, and then you can say that 1 lakh rupees of gain has been recognized, which is the realized gain. Okay. Now let's go to the question number 5. Yes, question number 5. This question number 5 is on disposal group. Disposal group means group of asset. Yes, Aminath. Yes, Saminathan, you have raised the hand. You have raised hand. Ask me a question. Saminathan, would you like to ask anything? Because I can see that you have raised the hand. Okay, let's move to question number 5. The disposal group is a group of assets. It's like a cash generating unit. You remember the concept in India 36, how to allocate impairment loss on the cash generating unit?
Yes,
What
sir.
was the concept of allocation of impairment loss? Can you please brief?
Firstly, to the extent of goodwill, we have to measure
Yes.
we have to allocate the impairment loss, and after that, in the proportion of carrying value.
Yes. So basically, whenever there is an impairment loss on cash generating unit on the group of asset, so if there is a goodwill which exists in the disposal group or in the cash generating unit, first you will allocate your impairment loss to the extent of goodwill. If the remaining impairment loss is available, then you need to allocate that impairment loss to the other assets in the ratio of their carrying amount. Subject to, if the individual asset in the disposal group itself is at recoverable value, itself is at NRV, then you cannot charge further impairment of that. For example, inventory. At what value inventory is recognized? At what value inventory is measured? Subsequently, inventory किस वैल्यू पे मेजर होती है?
Cost or
Cost
NRV,
Cost,
or
maybe whichever is lower.
cost or NRV, whichever is lower. Cost or net realizable value, whichever is lower. Okay. So inventory itself is at lower. Okay. So inventory itself is already impaired if impairment is there. Financial assets. Financial assets are always measured at fair value. तो फेयर वैल्यू पे मेजर कर रहे हो तो इंपेयरमेंट अगर है तो अपने आप ही आ गया. ओके. So now let's discuss this question number 5. Disposal group. Carrying amount at the reporting date before classification as held for sale is given. Okay. Goodwill 1500. PP 4600. Building 5700. Inventory 2400. Investment in equity instrument 1800. Total 16,000. Carrying amount is remeasured immediately before classification is held for sale. What is this? ये क्या है?
revalued value at the time of just before time of transferring it to non-current assets held for sale.
Step number 1. This is step number 1. कि step number क्या था? Compute the carrying amount as per the respective standard immediately before classification is held for sale. This was the step number 1. Okay. तो ये वो है carrying amount. So goodwill is same. Your PP from 4600 it become 4000. It means there was an impairment loss at the time of PPE standard. Building, no change. Inventory has also gone down by 200, right? From 2400 it become 2200. Means as per Ind AS 2, the impairment is already booked as per Ind AS 2. Okay. Then investment in equity instrument, from 1800 it become 1500. It means it become 1500. It means there is an impairment loss of 300. There is an impairment loss of 300. Okay. The entity estimated that fair value less cost to sell of the disposal group amounts to 13,000. What was the step number 1? This is step number 1. Compute the carrying value immediately before classification is held for sale. What is step number 2? This is step number 2. Estimate the fair value less cost to sell, which is 13,000. So what is the impairment loss on this disposal group? What is the impairment?
1,800.
1,000?
1,800. 900.
1,900.
No.
So step number 1 is remeasure the carrying value as per the respective standard before classification is held for sale immediately. And second one is fair value less cost to sell. Whatever is lower, you have to remeasure on that basis. So lower is 13,000. It means there is an impairment loss of 1,900. Okay. There is an impairment loss of 1,900. Now, determine the loss on measurement of carrying amount of assets immediately before and after classification is held for sale. Also determine the treatment or allocation of such loss to the assets of the companies. Also determine the treatment oblique allocation of such loss to the assets of the companies. To the assets of the companies. Further, in case at the end of reporting period, the fair value less cost to sell is increased. Further, in case at the end of the reporting period, the fair value less cost to sell is increased and estimated 15,500, then what amount of reversal will be allowed and on what all assets? तो क्वेश्चन ने क्या क्या पूछा है? क्वेश्चन ने पूछा है determine the loss on measurement of carrying amount of assets immediately before and after classification is held for sale. What was the loss before classification is held for sale? Before में क्या loss है? What is the loss before classification is held for sale?
1,100.
1,100.
1,100. 1,100
Yes.
is the loss before classification is held for sale. And what is the loss after classification is held for sale?
1,900.
1,900. So before 1,100, it is before 1,100 and after 1,900. Okay. So this is before, this is after. And after is 1,900. Okay. The second aspect. Also determine the treatment oblique allocation of such loss to the assets of the companies. Now tell me, out of 1,900, how you will allocate the losses to these assets?
1,500 to good.
1,500 will be charged to goodwill.
1,500
Then-
completely write down. Completely write off 1,500. Then remaining 400?
400 will be charged to PPE and building in accordance with their carrying value जो भी ratio होगा.
Why not on inventory and investment in equity instruments?
Inventory तो हम लोग का Ind AS 2 लगता है and for the equity 109 तो because of that.
वो already recoverable value पे है, already वो fair value पे है, right? So property, plant and equipment and building. इस रेशियो में करेंगे क्या करेंगे?
Sir, in the ratio of 4,000 and 5,700.
In the ratio of 4,000 5,700.
5,700.
So 4,000 और 5,700 के रेशियो में या 4,600 5,700 के रेशियो में? Yes, in this ratio. In this ratio. The ratio of step number 1 in this ratio. Okay. So what is the answer? Now you guys have understood. Let me show you the answer. Yes, you can see 14,900, 1,900 is the amount of impairment loss, which is allocated to goodwill completely. Goodwill has become 0. And this remaining 400 is allocated in the ratio of 4,000 is to 5,700. 165 and 235. And this is your amount of impairment loss. Okay. This is the amount of impairment loss. Now, what is the second question? What is the second part? What is the second part? Now this fair value less cost to sell is increased and estimated at 15,500. This part is tricky. Then what amount of reversal will be allowed and on which assets? So from 14,900 it becomes 15,500. How much is the increase?
600.
Is it from 14,900 or is it from 13,000?
13,000.
14,900. Sorry.
13,000.
13,000.
Your disposal group held for sale. What is the value of your disposal group held for sale now? 13,000. तभी तो आपने 1,900 का impairment loss allocate किया है. आपका disposal group held for sale की value क्या है अब? Which is lower of 14,900 and 13,000. Right? From 13,000, it becomes 15,500. So what is the increase? Increase कितना है?
2,500.
2,500. But whether the 2,500 increase has to be considered?
No, only 400.
No.
Why only 400?
Because we have the balance impairment loss we have already done in the previous section. Total impairment minus goodwill full 1,900 minus 1,500, so 400 remain. So that we have distributed between building and one more asset, PP, and so that's why 1,900 minus 1,500, 400 we have distributed impairment loss.
Sorry, I didn't get you, Abrakesh.
Sir, our loss on converting it to NCFH was 1,900. 14,900 minus.
Why you are only concerned about 1,900? There was an impairment loss of 1,100 also, na? So you have to look at cumulative impairment loss.
Yes, 1,100 I forgot. Yes. That I forgot, 1,100.
Yeah.
Yes.
So initially, initially it was 16,000. Initially the property was 16,000. Then it became 4,900. Then it became 13,000. So the total impairment loss was 3,000. Now this increase is 2,500, right? So you can, now this fair value less cost to sell is increased to 15,500, 2,500 rupees of increase. So maximum impairment loss reversal allowed will be 1,900 being impairment loss recognized earlier.
Yes.
I don't know why it is saying that 1,900 being recognized earlier. So not only 1,900, this 1,100 loss was also there. Okay. So while you have to, in the 1,100 loss, the loss of, what was the loss on the PP? 600 loss on the PP was there. 600 loss. Right? On building, there was no loss. On inventory, of course, it is as per Ind AS 2. Inventory is as per Ind AS 2. So 600 loss on PP is there. 600 loss. Impairment loss on goodwill cannot be reversed. Okay. So 600 loss of PP and 400 loss of this PP and building should be there. Only maximum 1,000 loss can be reversed on this asset, on this disposal group. Right? Yes. So we need to check the solution. I'll discuss with ICAI and we will check with the solution for this part. Only this part, right? Okay, is that clear? The reversal on goodwill is not allowed. You remember, na?
Yes.
Reversal on goodwill, impairment loss reversal on goodwill is not allowed. Okay? Yes.
Sir, can you please explain last step once again? It's not clear about the reversal.
So basically, are you clear about the disposal group held for sale? Step number 1, step number 2, you are clear?
Yes, only last step.
Okay. So basically, let me explain again. When you are transferring any asset as a non-current asset held for sale, you need to recompute the carrying amount as per the respective standards, right? So here, the carrying amount as per the respective standard comes out at 14,900. There is an impairment loss of 1,100. Then when you are classifying this asset as a non-current asset held for sale, it becomes 13,000. So what is the further impairment loss? 1,900 is the further impairment loss. Okay. 1,900 is the further impairment loss.
Yes, sir.
So at the first step, when you are recomputing the carrying amount, this 16 become 14,900. So PP become 4,000. From 4,600 PP become 4,000. Okay.
Yes, sir.
तो PP पे कितना लॉस हुआ था? इम्पेयरमेंट लॉस
600 का.
600 का. Building no loss. Inventory loss is as per Ind AS 2.
Yes, sir.
Okay. Investment in equity instrument, it is also as per Ind AS 109. All these items are fair valued. Okay. So technically speaking, what is the impairment loss on at the first step, which is allowable to be reversed?
So 600 and sir, only 600, no?
600, in this case 600 on this PP, and further when we allocated this further impairment loss being step number 1 and step number 2, whichever is lower, so that was 400. हमने 400 का किया था ना. गुडविल का रिवर्सल तो अलाउड नहीं है. 600 plus 400, 1,000. So this is what I am saying. This 1,000 rupees of impairment loss can be reversed. Okay. But now what is the reversal? From 13,000, this value becomes 15,500. So 2,500 value has been increased. Okay.
Yes.
But out of 2,500, you can only recognize 1,000. Okay.
Okay, sir. Got it, sir.
Yes. So
Thank you,
friends,
sir.
it's 8:18 now. Let's have a 10 minutes break. Okay. We'll start at 8:28. Then I'll discuss some more questions. Okay. So Saminathan has a question. Let me complete Saminathan's question. He has written a question. Sir, my mic is not working. My query is on question number 6. Okay, let's come to the question number 6. Yes. So guys, Saminathan has asked a question. And he is asking, sir, in question number 6, fair value less cost to sell is 30 lakhs. But we recognize 29 lakhs. Reason as per Ind AS 105, we can adjust up to impairment loss already available. Okay. My question is that 30 lakh fair value less cost to sell is highly probable. Why not we account for full value? That is with 30 lakh instead of rupees 29 lakh. I mean, we are understanding the NCHFS. Please advise logic involved in it. Saminathan, you know what happened? The standard being very conservative, right? When you are initially measuring your non-current asset held for sale, it has to be measured at lower of carrying amount and fair value less cost to sale. Okay. Once it comes under the kitty of Ind AS 105, depreciation and amortization is not allowed. Okay. Then when you come to the subsequent measurement date, which is reporting date, standard says that you have to remeasure at fair value less cost to sell. You have to remeasure. Okay. So when you remeasure at fair value less cost to sell, since you have not actually sold out, you have only assessed what is my market value. The actual sale price could be different from the market value. When you negotiate, when you enter into a deal, it is different. Okay. So in this case, standard says that whenever there is a increase in the fair value less cost to sell, being a conservative, you should not recognize the impairment gain because you have not actually sold out the property. But since whatever you have actually recognized as an impairment loss, to that extent you can recognize a gain. Okay, impairment gain. That is why in this question, there was two increase. There were two fair value increase. Okay. The total impairment loss was 3.5 plus 0.5, 4 lakh was there. 1.5 lakh of impairment gain we have already recognized. So remaining 2.5 lakh which is left, that we have recognized, right? So 25 plus 1.5 plus 2.5, 29 lakh becomes the carrying amount of that NCA HFA. Okay. When this property will actually sold out at 30 lakh, then 1 lakh rupee of realized gain will also be recognized. Okay. Because now it has actually been sold out. Is that clear? Saminath, can you please confirm on the chat box? Okay. Yes. Thank you so much. Friends, it's 8:22 now. Let's have a 10 minutes break and we will start at 8:32. Okay. Is that fine? Now let's come to question number 3. I hope the word file is visible. Identify which of the following is a disposal group as on 31st March 2001. On 21st March 2001, XYZ announced the board's intention to sell its shares in a subsidiary company, Alpha, contingent upon the approval of Alpha's shareholders. It seems unlikely that approval will be granted in the near future, and no specific potential buyer has been identified. Whether it will be a disposal group or it will not be a disposal group.
Not a disposal group.
Why?
Because potential buyer has not been identified and approval is not granted by the shareholders.
Potential buyer is not identified. What does it mean?
Sir, buyers are not available for buying the...
So two things. So basically, number one, the board has announced the intention to sell its shares in a subsidiary company, but which is contingent upon the approval of the Alpha shareholders, right? If the shareholder will deny, of course, that will not happen. That is number one, right? So because the approval, the sale of the shares requires shareholder approval, and since shareholder approval has been not been received, you cannot say that the company is committed to sell the shares, right? That is number one. Number two, the potential buyer has not been identified. Potential buyer means who will buy the asset. It's not about an individual person. Who will be the community to whom it has to be targeted. For example, let's say there is a site, there is a website which only deals with the commercial sales. Commercial means like offices, right? Shops, others. Somebody wants to sell his residential house. So if he will list his residential house, if he list his residential house lead to a commercial website, whether he will be able to sell that residential house? Answer is less likely. Answer is less likely. Why? Because that target community is only the commercial community, not the residential community, right? So two aspects here. Number one, the management is not committed. Why? Because this requires shareholder approval and the shareholder approval has not been obtained. Number two, the potential sector, the potential buyer has not been identified. That who could be the potential buyers. Okay. And hence, it is not meeting the criteria as held for sale. Okay. Not meeting the criteria as held for sale. PQR has entered into a contract to sell the entire delivery fleet of vehicles operated from its warehouse to a competitor. So PQR has entered into a contract to sell. Enter into a contract to sell the entire delivery fleet of vehicles operated from its warehouse to a competitor. ABC on 14th March 2001. The assets will be transferred on 28th April 2001, from which date the group will outsource its delivery activities to another company, LMN. Okay, LMN. Whether this is meeting the disposal group held for sale criteria or not. Tell me, in this case, whether asset is available for immediate sale in present condition? Whether sale is highly probable? Yes, you can see this has already entered into a contract. Already contract भी हो गया, buyer भी identify हो गया, contract भी हो गया, right? And this contract was entered on 14th March and the asset will be transferred on 28th April after 1 month and 14 days. From which date the group will outsource delivery activities to another company, LMN. Right? Third, on 16th January 2001, DEF management and shareholder approved a plan to sell its retail business in Mumbai, and a consultant is hired to manage the sale. So the shareholder and management is approved a plan, okay, and consultant is also hired to manage the sale, okay. As on 31st March 2001, so it was 16 January, then 31st March, then 31st March, agreement has been signed. Agreement has been signed, although due diligence and the negotiation of final terms are still in process. The transaction is expected to be complete in April 2001. Tell me whether this disposal group is meeting the held for sale criteria. Is it meeting the held for sale criteria? Yes or no?
Yes, sir.
Yes, it is meeting.
Quite
Right.
clearly.
You can see quite clearly. Yes. You can see management is committed. Already preparation have started to sell the asset. Right. Even the agreement to sell is signed. Agreement to sell bhi sign ho gaya. Right. So in this case, it is also classified as held for sale.
The clinching is they're saying the transaction is expected to be completed in April.
Yes. Yes. It is also expected to be completed within 1 year from the date of classification as held for sale. Right. So DEF sale of retail business will not be completed until the final terms are agreed. However, the business is ready for immediate sale and the sale is highly probable unless other evidence after reporting date but before the financial statement are approved for issue comes to the light to indicate the contrary. Okay. Otherwise, it is presented as held for sale. Now let's discuss question number 2. All set for question number 2? CK Limited prepare the financial statement under Ind AS for the quarter and year ended 30th June. During the 3 months ended 30th June, the following events occurred. On 1st April 2001, the company has decided to sell one of its division as a going concern following a recent change in its geographical focus. The company has decided to sell one of its division, right? One of its division. The proposed sale would involve the buyer acquiring the non-monetary assets, including goodwill of the division, with the company collecting any outstanding trade receivable relating to the division and settling any current liabilities. Okay. On 1st April, the carrying amount of the asset of the division were as follows. Goodwill 60,000, PP&E 20 lakh, and inventories 10 lakh rupees. The values are given. So on 1st April 2001, the value of the disposal group is there. Purchase goodwill, PP&E, and inventories. Average remaining estimated useful life is 2 years. From 1st April 2001, the company has started to actively market the division and has received number of serious inquiries. Means active program to locate a buyer has been started. Active program to locate a buyer has been initiated. On 1st April 2001, the director estimated that they would receive 32 lakh from the sale of the division. The director estimated that they would receive 32 lakh from sale of the division. Means it is also marketed at a reasonable price. since 1st April, market condition has improved, and as on 1st August, the company received and accepted a firm offer to purchase the division for rupees 33 lakh. Okay. The sale is expected to complete on 30th September 2001, and 33 lakh can be assumed to be a reasonable estimate of the fair value of the division as on 30th June 2001. So on 1st April, the carrying value of few assets are given. Okay. Then fair value is also given, which is 33 lakh. It is written in the question. During the period from 1st April to 30th June, inventory of the division costing 8 lakh were sold for rupees 12 lakh. अब ये जो 8 लाख रुपए की इन्वेंट्री, जो 10 लाख में से 8 लाख की इन्वेंट्री थी, उसको 12 लाख में बेच दिया फ्रॉम 1st April to 30th June. So what this is indicating? What this line is indicating? The value of the assets, the carrying value of the asset is given on 1st April. And the ask of the question is on 30th June. Right? So you need to compute the carrying amount immediately before classification is held for sale. You need to compute the carrying amount as on 30th June 2001. Okay. During the period from 1st April to 30th June, inventories of the division costing rupees itne were sold for itne. At 30th June, the total cost of the inventories of the division was rupees 9 lakh. The total cost of the inventory is given at 9 lakh. All of these inventories have an estimated NRV which is in excess of their cost. Means cost or market value, whichever is lower, cost or NRV, whichever is lower, NRV is higher than the cost. So inventory is at cost. Suggest how the proposed sale of the division will be reported in the interim financial statement for the quarter ended 30th June 2001, giving relevant explanations. कैसे करेंगे बताओ? How will we do this? How will we do this? Tell me. First of all, tell me whether this is only a disposal group held for sale or it is a discontinued operation also. Tell me, is this question only talks about disposal group or this question is also talking about the discontinued operations? Guys, at least you can say yes.
Held for sale.
Only disposable group.
What is discontinued operations? What is discontinued operation? Disposal group we understood. Disposal group is having a group of assets and liabilities. Okay. So that is known as a disposal group held for sale. So for disposal group held for sale to be covered under Ind AS 105, at least one asset should be a non-current asset. The remaining asset could be a current asset. The remaining liabilities may be there. Minimum one asset should be a non-current asset in a disposal group to be covered in the disposal group held for sale. What is a discontinued operations? Discontinued operations is discontinuation of a division, a product, a major product line, a geographical area of operations, right? Or is a subsidiary acquired exclusively with a view to resale. That is the meaning of discontinued operation. डिसकंटिन्यूड ऑपरेशन का मतलब क्या होता है? ट्रांसफर ऑफ डिवीजन, सेल ऑफ प्रोडक्ट, मेजर प्रोडक्ट लाइन, sale of one of the geographical area of operations. This is the meaning of discontinued operations. Okay, right? So discontinued operation is a component of an entity which has been disposed of or is classified as held for sale and represent a separate major line of business or geographical area of operation. Separate major line of business could be a division, department, or a geographical area of operations, right? So this question is disposal group held for sale as well as discontinued operations, right? Every discontinued operations would be a disposal group held for sale. Let me ask you a question. Let's say I have an institute in Gurgaon. I'm just giving you a hypothetical example. In my Gurgaon institute, I'm teaching financial reporting. I have an institute in Delhi where I'm teaching auditing. My both setup are different. In Gurgaon, I have a different set of students. I have different set of customers. In Delhi, I have a separate set of students, right? And this Gurgaon and Delhi setup, I can evaluate from operational aspect as well as financial aspect because the students are different, subjects are different, and I'm getting a fee. I have hired some staff to whom I'm paying a salary, and both are the different staff. Okay, I'm paying a rent for that building which is in Delhi. I have the separate furniture like table, chair, projector, and the other aspects. So I have decided to discontinue my Delhi institute. Okay. Now I'm asking from all of you whether this discontinuation of Delhi business will be a discontinued operation.
Yes.
Yes, it is a discontinued operations. But whether every discontinued operation has a disposal group held for sale also.
Yes, sir.
Yes. Okay. Now your answer will change. So let me give you an example. So in my Delhi institute, I'm shutting down my Delhi operations, shutting down my Delhi institute. Okay. I have what I have there. Let me explain you. I have the library in which books are there. I have water purifier from which the students are drinking water and even the faculties and I myself is drinking water. I have the tea and coffee vending machine. I have chair, table, computer, laptop, projector, okay, air condition. I have these kind of assets. I have these kind of chunk of assets. So my question to all of you, whether it is mandatory that I should sell all these assets for shutting down my business? मैं सिंपल सवाल पूछ रहा हूं, क्या मुझे सारे एसेट्स को बेचने की क्या मैंडेटरी रिक्वायरमेंट है?
No, sir.
No. What could be the alternate use? I can use all these assets in my existing Gurgaon business, in my existing Gurgaon institute. I can expand that institute, right? Or probably I can use those assets in my existing setup. तो अगर मैं उसको नहीं बेचता, पर क्या डिस्कंटिन्यूड ऑपरेशन है? वो तो है, बिकॉज आई एम शटिंग डाउन माई डेली ऑपरेशन, right? But I'm using all my chunk of asset in my Gurgaon institute. In this case, while it is a discontinued operation, but it is not a disposal group. While it is a discontinued operation, but it is not a disposal group. It is not a disposal group. Okay. But if I decided to sell all the assets, my assets are readily available for sale, then of course it is a discontinued operation which includes disposal group held for sale. So my dear friends, in discontinued operation, if it is a disposal group, the accounting has to happen as per disposal group. But if it is a discontinued operation, more disclosure will come. More disclosure will come from the discontinued operations perspective. Are you clear on this? What are those disclosure? Let me explain you. Let me explain you the disclosure of discounted operations. Just hold for a minute. Yes. Discounted operations. If discounted operation includes disposal group held for sale, I hope my Excel file is visible to everyone. Excel file is not visible? Yes, okay, it is visible. If discounted operation includes disposal group held for sale, so measurement requirement is for disposal group plus presentation and disclosure for discounted operations. But if discounted operation does not include disposal group held for sale, then no measurement and only presentation and disclosure for discounted operations. And let me tell you why there are additional disclosures for discounted operation and why it is mandatory. Why it is important to disclose the result of discounted operation separately. The company has three operations. The company is selling three major product line, right? A, B, and C. The company has sold A and B for the full year, 1500 crores. And what was the revenue? The revenue was 1500 crores. The product C, the company has sold for 9 months and the revenue is 500 crores. What is the total amount? Total amount is 2000 crores. The company has discontinued the product C, operation C, on 31st December during the year. On 31st December during the year. The company has discontinued operation C on 31st December during the year. Okay. The total value is 2000 crores. Okay. Now, there are two options and I want you to guide me, help me. What is the better option? Option number one, the company is writing revenue from operation 2000 crore. Option number two, revenue from operations, continuing operations 1500, discontinued operation 500, and total revenue from operation 2000 crore. Which is the more clear, transparent option? Which option I should go for?
Two. Option 2.
Option
2, sir.
Option 2. Why option 2?
More disclosure is here.
So basically, this option gives more transparent disclosure. This option provides a fair picture to the user of the financial statement, right? So when I'm looking at option number 1, I was saying, wow, the company's revenue is 2000 crores. So it means the company future revenue is also in the same line. But when I look at option number 2, what assumption, what conclusion is in my mind? Oh, the sustainable revenue is 1500 crore, which is from continuing operation. And this 500 crore of revenue is not a sustainable revenue, right? This 500 crore is from discontinuing operations. Okay. So out of this 2000 crore, this 500 belongs to that part which has already been shut down, Okay. Right. So this option number 2 is more transparent. Doesn't matter if you have discontinued operations, doesn't matter it is disposal group or not, right? You have to make some additional disclosures. Is that clear? Now, what about P&L, right? So this was only for one line item. I want to clarify your thoughts, okay? Now for the entire P&L, there are two options. Option number 1, each and every item, revenue, continuing operation, discontinuing operation, expense, continuing, discontinuing, PBT, continuing, discontinuing, tax, continuing, discontinuing, PAT, continuing, discontinuing. Option number 2, only write in the statement of P&L, you should write continuing operations. Then you should give the entire P&L of continuing operation, revenue, expense, PBT, tax, PAT. For discontinuing operation, you can refer the note number, and the P&L of discontinued operation, you can give the notes to accounts, and only profit before tax, tax and profit after tax, you need to pull to the main statement of profit and loss, right? And the detailed P&L you can give in the notes to accounts, right? So then profit after tax from continuing operation, profit after tax from discontinued operation, this will become total profit after tax. So both the options are allowed as per the standard. According to you, what should be the more clear option? I know you guys, being a student, will say option number one. While both the options are allowed, normally listed companies, big companies of India, offer option number two. All these companies are offer option number two. You know why? Because the P&L becomes very lengthy and it becomes confusing also for every line item, continuing, discontinuing. So you're not able to, just make out what is my total revenue minus this, right? But in this, you got the entire picture at one place and the entire picture at one place. Okay. So this option number two is a preferred option, not as per the standard, but as per the industry practice. Okay. So in case of discontinued operations, the earning per share in the statement of profit and loss will be shown as follows. Basic and diluted earning per share for continuing operation, for discontinuing operation, and for total operations. Right? So this is the outcome of disposal group held for sale and discontinued operations. I hope you guys are able to remember, revise, and you are able to understand this part also. Shall I go to question number 2 now? Now, we understood that in this question is touching the disposal group and discounted operation both. So this discounted operation has a disposal group also. So what is the date of classification as held for sale? What is the date of classification as held for sale? On 1st April 2001, the company has decided to sell one of its division as going concern following a recent change. Proposed sale would involve the buyer, this, with the company. And on 1st April, these are the assets and the liabilities. On 1st April, these are the assets and the liabilities. Okay. On 1st April, the company started to active market the division and already started getting the queries also. Okay. And on 1st April, the estimated price, the estimated value is 32 lakh. Okay. Since 1st April, market condition is improved and as on 1st August, the company received and accepted a firm offer to purchase for division 33 lakh. And the sale is expected to complete by 30th September on 33 lakh. And question is saying, you can assume this 33 lakh as a value as on 30th June also. Right. So first of all, what is the date of classification as held for sale? What is the date?
1st April.
1st April. On the 1st April, what is my value of, assets? What is the value of my assets on the 1st April? मेरे assets की value क्या है?
30,60,000.
30,60,000. And how have you arrived at 30,60,000? 60,000 goodwill, PP 20, 10 lakh this. 20, 10, 30 lakh 60,000. Right. And what is my fair value less cost to sell? What is my fair value less cost to sell? इसमें लिखा है ना कि on 1st April director estimated that they would receive 32 lakh from the sale of the division. 1st April को बहुत सारे buyers का inquiry आई and buyers are ready to pay 32 lakh, right? So 32 lakh का जब inquiry आया इसका मतलब क्या है? Fair value less cost to sell आपकी कितनी होगी? 32 lakh. So what is your carrying amount? 30,60,000. What is your fair value less cost to sell? What is the fair value less cost to sell?
32 lakhs.
Any doubt, any confusion on 32 lakh? Yeah? No doubt, no confusion? Okay, very good. So 30,60,000 versus 32 lakh. What is lower? 30,60 is lower, 32 is lower. What is lower?
30,60,000.
So is there any impairment on reclassification as held for sale? Is there any impairment in this case?
No, sir.
No, because fair value less cost to sell is higher. There is no impairment. Okay. Clear? Okay. Now, so we understood there is no impairment. Now we'll come to reporting date. What is the reporting date in this case? What is the reporting date in this case?
30th June.
30th June is the reporting date. 30 जून पे क्या करेंगे? What we will do on 30th June? थर्टी जून पे क्या करेंगे?
एसेट्स को डिस्क्लोज करेंगे.
On 30th June, since the asset has actually not been sold out, you will remeasure this disposal group held for sale. You will remeasure. और रीमेजर आप किस पे करोगे? फेयर वैल्यू लेस कॉस्ट टू सेल पे करोगे. व्हाट इज द फेयर वैल्यू लेस कॉस्ट टू सेल विच इज गिवन इन द क्वेश्चन? फेयर वैल्यू लेस कॉस्ट टू सेल क्या होगी? मार्केट वैल्यू होगी ना. इस क्वेश्चन में कॉस्ट टू सेल दी नहीं गई. सो वी विल एज्यूम दिस मार्केट वैल्यू एज अ फेयर वैल्यू लेस कॉस्ट टू सेल. इसमें साफ साफ लिखा भी है कि द सेल इज एक्सपेक्टेड टू दिस डेट and 33 lakh can be assumed to be a reasonable estimate of the value of the division as on 30th June. Right? So will you compute the carrying amount of goodwill, PPE, inventory on 30th June also? Will you compute? I mean to say, will you depreciate PPE?
No, sir.
No. Once the asset is classified as held for sale, no depreciation. Majority of the students have made a mistake. Why? Just to confuse you guys, this question has written PP average remaining useful life of 2 years. And everybody has done the calculation and charged the depreciation for 3 months. Guys, you need to understand. First, from the accounting perspective, this question talks about your disposal group held for sale. Okay. From the accounting perspective, this is held for sale. Okay. On 1st April. So on 1st April, the carrying amount is 30,60,000. The fair value less cost to sell is 32 lakh. So it has to be transferred to disposal group held for sale at the carrying amount. Then inventory, it will go by its own pace. Inventory जितनी परचेज होगी, जितनी सेल होगी, इन्वेंट्री का क्लोजिंग बैलेंस आ जाएगा. PPE you will not depreciate because once the asset become held for sale, it is not subject to depreciation. Okay. Goodwill will remain as it is since there is no impairment loss. So when you come to 30th June, on 30th June, you will again remeasure the fair value less cost to sell. Now the fair value less cost to sell become 33 lakh. So there is an upside of 1 lakh. Sorry, not upside of 1 lakh. The upside of 3060 versus 33. So there is an upside of 2,40,000. Will you recognize this upside of 2,40,000? You haven't recognized any impairment loss.
No, sir.
No, right? Because the upside can be recognized, upside can be taken only to the extent of downside taken earlier. There is no downside in this question, right? So this will be your this thing. So let me read the solution further. The decision to offer the division for sale on 1st April means that from the date the division has been classified as held for sale. The division available for immediate sale is being actively marketed at a reasonable price and the sale is expected to be completed within 1 year. The consequence of this classification is that the asset of the division will be measured at their lower of their carrying value and their fair value less cost to sale. Here, the division shall be measured at their existing carrying amount, which is 30,60,000, since it is less than the fair value less cost to sale. Okay. The increase in the expected selling price will not be accounted for since earlier there was no impairment to division held for sale. The asset of the division need to be presented separately from other asset in the balance sheet. Their major classes should be separately disclosed either on the face of the balance sheet or in the notes to accounts. Right? The property, plant and equipment shall not be depreciated from 1st April to 30th June. Right? It will be 20 lakh only. The inventory of the division will be shown at 9 lakh rupees. The division will be recorded as discontinued operation for the quarter ended June 30th, 2001. It represents a separate line of business and is held for sale at the year end. The statement of profit and loss should disclose as a single amount The post-tax profit or loss of the division on classification is held for sale. Further, as per Ind AS 33, earning per share has to be separately disclosed for continuing operation, discontinuing operation, and total operations, right? And total operation. This is what it is. Is that clear? Is that clear, friends? I hope it is clear to everyone. Any doubt in this question now? Clear. Manish is saying clear. What about others? Let me help you with the revision of change in plan of sale also, right? Change in plan of sales. So very important part. If the question will be complex, the question can touch the aspect of change in plan of sale as well. Yes. Friends, as I told you, on the once an asset will be classified as held for sale or a disposal group is classified as held for sale, you have to measure on the date of classification is held for sale, you have to measure the non-current asset held for sale at lower of carrying amount as per the respective standard immediately before classification is held for sale and fair value less cost to sale. Okay, you have to measure that. Then subsequently you have to measure on the reporting date at fair value less cost to sale. Okay. And once the asset become held for sale, no longer depreciation or amortization will be charged. So we understood this part. Now what happened? When the asset is no longer meeting the held for sale criteria, and I will explain this with the help of a classic example, right? And when I was talking about the sale is highly probable, when I was talking about the sale is highly probable, I haven't told you that it is impossible that the sale plan will not change. It is unlikely that the sale plan will not change. It is unlikely. But I never said that it is impossible. You can see action required to complete the plan indicate that it is unlikely that the sale plan will be changed or withdrawn. Okay. And I'll give you a classic example of the change in the sale plan as friends, in mid of 2019, somewhere in August 2019. So there was two factories of a company. There were two factories, and both the factories were used for the manufacturing of sanitizers. For the manufacturing of sanitizers in Uttar Pradesh. So since before COVID, the demand of the sanitizer was limited and largely it was to the hospitals. But normally in our residence, in our home, in our offices, we don't use sanitizer before COVID. So this company has decided to sell the one of the factory in the running condition. They have decided to sell the factory. The factory was available for immediate sale in present condition. The sale was highly probable. After 3-4 months, when the COVID came to India, and you guys have seen, the demand of sanitizer has increased like anything. Every company started manufacturing sanitizer, be it Hindustan Unilever, be it anyone, Dabur, Nestle, ITC, even every fourth house has started manufacturing sanitizer with the help of YouTube. Yes or no? I hope I am talking very practical here. Yeah.
Yes, sir.
So this company which wanted to sell one of the factory was committed to sell the factory. Now, after COVID, this company is thinking about buying one more factory. Right? This company is thinking about buying one more factory. So tell me, if this company is thinking about buying one more factory, whether this entity, whether this company will sell that factory. No, of course, no. Of course, no. Right? So now this company don't want to sell the factory. The factory is no more available for sale. If the factory is no more available for sale, whether it will be classified as held for sale, whether it will continue to classify as held for sale, answer is no. So when there is a change in the plan of sale, now what will be the accounting treatment? We are going to discuss that, right? This is one of the important aspect in this particular standard, okay? So friends, when it was normally a factory, right? It was covered under Ind AS 16. When it was classified as held for sale, it got covered in Ind AS 105. Now again, when the sale plan has changed, again it will be reclassified to where? Again, it will be reclassified to Ind AS 16, property, plant and equipment. Okay. So friends, when there is a change in plan and the asset is no longer meeting the definition of held for sale, then you have to reclassify and remeasure the asset at lower of carrying amount had the asset never been classified as held for sale. आप क्या करोगे? आप कंप्यूट करोगे कि मेरी एसेट की कैरिंग अमाउंट क्या होती अगर वो एसेट कभी भी हेल्ड फॉर सेल क्लासिफाई नहीं होता. What would have been the carrying amount had this asset never been classified as held for sale? Right? अगर नहीं होता हेल्ड फॉर सेल क्लासिफाई तो क्या होता? आप उस पर डेप्रिसिएशन चार्ज करते, अमोर्टाइजेशन चार्ज करते, राइट? यस और नो? Yes. So carrying amount, assuming had this asset never been classified as held for sale, and recoverable amount at the date of change of plan. What is the recoverable amount? Higher of fair value less cost to sell and value in use. Recoverable value, right? So you have to reclassify and remeasure at lower of carrying amount and recoverable amount. Lower of carrying amount and recoverable amount. So let's understand this question. Understand this concept with the help of this question. Okay. This question will cover the complete aspect of transfer from Ind AS 16 to Ind AS 105 and 105 to again come back to Ind AS 16. A property is purchased for rupees 5 lakh on 1st January 2019. So Priyanka, I need answer from your side, okay, this time. A property is purchased for 5 lakh rupees on 1st January 2019. The useful life of the property is 20 years, zero residual value. So Priyanka, what is the per annum depreciation?
25,000.
25,000, very good. The property is measured subsequently at cost model. It is a depreciated historical cost. On 31st December 2020, it means after how many years?
2 years.
2 years.
2 years. So first, it's a calendar year. 1st January 19, 31st December 19, 31st December 20. After 2 years, it is decided that the property is to be classified as held for sale. Classification criteria is meeting. What is my cost? 5 lakh. What is my accumulated depreciation?
50,000.
50,000.
50,000.
50,000 for 2 years. So what is my carrying amount after depreciation? Cost minus depreciation? 4 lakh. 50,000. Then it is written, an impairment assessment on 31st December 20 determines the recoverable value based on value in use to be rupees 4 lakh. So this is not fair value less cost to sell. This is based on value in use. Recoverable value is given. So whether I need to charge any impairment loss, it talks about the recoverable value of 4 lakh.
Yes.
And whether this 50,000 rupees of impairment loss is as per Ind AS 105 or Ind AS 16.
Ind AS 16.
What is the formula of carrying amount in Ind AS 16?
Cost minus depreciation minus impairment loss.
Cost minus accumulated depreciation minus accumulated impairment loss, right? So in this case, cost is 5 lakh minus accumulated depreciation 50,000 minus impairment loss 50,000. This is the carrying value as on 31st December 20 as per Ind AS 16 PPE standard. Okay. The fair value less cost to sell on 31st December 2020 is 3,90,000. Is 3,90,000. Okay. So what is my carrying amount? 4 lakh. What is my fair value less cost to sell? 390. What is lower? 4 or 390, whichever is lower. What is lower?
390.
390. What is the accounting entry you will pass?
Property debit 3,90,000.
Sorry, can you repeat again?
Property debtor 3,90,000.
Non-current asset held for sale debit
Not good.
3,90,000. Credit. What will be credit? Property PP will be credited now.
Yes, sir.
On 31st December 20, this property which was PP is classified as held for sale now. So you have to debit held for sale asset and you have to credit Ind AS 16 asset. Right? So non-current asset held for sale debit 3,90,000 to PP&E credit to property PP&E credit. What value?
4 lakh.
4 lakh. Where 10,000 will go?
Impairment loss, P&L.
Impairment loss on classification as HFS. What is the total impairment loss on this asset?
60,000.
60,000. 50,000 at the PP and 10,000 is the as the Ind AS 105. Okay, 10,000 is Ind AS 105. So this is the answer. 450, 54 lakh. So this was as per step number 1 and this is step number 2, fair value less cost to sell. Okay, this 10,000 rupees impairment is also there. Okay. Now let's move to the next part. So we discussed up to this part. This part was talking from transfer to Ind AS 105 from Ind AS 60. On 31st December 21, there is a change in plan and the property no longer meet the criteria to be classified as held for sale. After how many years?
1.
After 1 year, there is a change in plan and this property is no longer meeting the criteria of held for sale. There is no change in the useful life of the property at any point of time. Means the life was 20 years and the life was decreasing as per the cycle. Okay. The recoverable value at 31st December 21 is 385. What is the use of this recoverable value?
Reclassification.
Reclassification to PP. So on 31st December 21, this asset was again reclassified to PPE. So what should be the value at which it has to be reclassified to PP? We will debit our PP by what amount? What is my step number 1? Compute carrying amount assuming this asset was never impaired. Matlab, compute carrying value of this property as per the PP standard on 31st December 2021 assuming this asset was never held for sale. Assuming this asset was never held for sale. Okay. So what is the carrying amount as on 31st December 21 as per Ind AS 16 assuming this asset was never held for sale?
4
क्या
lakh.
value होगी?
4
Sorry?
lakh 25,000.
4,25,000. Okay. Anyone else?
Sir, it will be 3,77,778.
Can you please explain why it is 377,778?
Sir, because on 31st December, the value of the property was 4 lakhs. So we'll charge depreciation on 4 lakhs. So it will be 4 lakh into 1 upon 18 and that depreciation will charge.
Very good. Yes. So tell me, had this asset never been classified as held for sale? अगर ये एसेट कभी हेल्ड फॉर सेल क्लासिफाई नहीं होता तो भी क्या होता? यू हैव टू डू द पीपी अकाउंटिंग. आप पीपी अकाउंटिंग तो करते हैं ना, इंड एस 16 अकाउंटिंग. एज पर इंड एस 16, व्हाट इज द फॉर्मूला ऑफ द कैरिंग अमाउंट?
Cost minus accumulated depreciation.
माइनस माइनस
Impairment loss.
impairment loss. What does it mean? It means this impairment concept is there in PPA also, right? And Index 36 says that no asset in the balance sheet should exceed the recoverable value, right? तो अगर ये हेल्ड फॉर सेल नहीं भी होता तो भी आप क्या करते, ये काम नहीं करते. बट क्या यहां तक करते नहीं करते? और ये वैल्यू तो मैंने इस पर इंडेक्स 16 ही निकाली है. बिफोर क्लासिफिकेशन इज हेल्ड फॉर सेल. यस और नो?
Yes.
Anybody has any doubt? This carrying value is already as per Ind AS 16. This is prior to reclassification as HFS. Ind AS 16 says that please deduct depreciation from the cost and also deduct impairment loss from the cost. Ind AS 16 says that. Okay. Ind AS 16 says this. Okay. So if, as rightly mentioned by her, the closing value is 4 lakh, the remaining, what is the remaining useful life on 31st December 20?
18.
18 years. So what is my prospective depreciation? मुझे 4 लाख को ही depreciate करना है ना अगले 18 साल में. Think about, I have to depreciate this 4 lakh over a period of 18 years, not 25,000 every year. So guys, you guys have forgot the fundamentals. That depreciation has to be applied prospectively. Whatever is the carrying amount divided by the remaining useful life. So when you are saying 25,000, just think about 25,000 multiplied by 18. You know, it will give you what value? It will give you the value of 4.5 lakh. But your carrying value is only 4 lakh. Right? So it comes out at 22,222. So 4 lakh is the carrying value. This is the per annum depreciation, 4 lakh divided by 18. And this is the carrying amount that would have been had this asset never been impaired, 377,778. This is the recoverable value, 3,85,000. And this is the lower value which is going to be recognized, 377,778. What is the accounting entry? What is the accounting entry? रिक्लासिफाई क्या कर रहे हो?
PP account debit.
पीपी अकाउंट डेबिट. किसको कर रहे हो रिक्लासिफाई? रिक्लासिफाई कहां से किसको कर रहे हो? फ्रॉम वेयर?
Non-current asset held for sale.
So that has to be credited. PP account debit, non-current asset held for sale credit. At what value PP will be debited?
3,77,78.
Yes. At what value NCHFS will be credited?
4 lakhs.
3,20,000.
3,90,000. 390. 390 is the value of NCHFS. 390 पे ही तो किया था 31 दिसंबर 20 को. This is the value of NCHFS. So PP debit 377,778 to NCHFS credit 390. Where the difference of 12,222 will go?
Income statement.
The income statement is okay, but where? What is that? That is impairment loss.
Impairment loss.
That is impairment loss on reclassification as held for sale. Impairment loss on reclassification is held for sale. Okay. I hope this is clear to everyone. Any question, any doubt? You can ask me if you have any question or any doubt. Do you have any question? Do you have any doubt? Yes or no? क्लियर है?
हाँ सर.
Very much clear?
Very much clear, sir.
Okay, very good. Now let's discuss question number 1 from the study material, from the ICAI shared questions. Question number 1. Very lengthy question. Following is the extract of the consolidated financial statement of A Limited for the year ended on 31st March 2001. All these numbers are in thousand. The goodwill, intangible asset, financial asset, PP&E, deferred tax asset, current asset, which is inventory, receivables, and cash balances. Current liabilities are also there. And non-current liabilities provisions are there. Okay. Whether impairment has to be charged on liabilities?
No, sir.
No, liabilities are never impaired. Liabilities are written back. Impairment of liability is a positive thing. Impairment of asset is a negative thing. And Ind AS 36 talks about impairment of assets, right? So this is the balance sheet which is given on 31st December 2001. Sorry, 31st March 2001. And on 15th September, entity A decided to sell the business. It noted that the business meet the condition of disposal group classified as held for sale on that date in accordance with Ind AS 105. However, it does not meet the condition to be classified as discontinued operations in accordance with that standard. तो क्या होगा इससे? डिस्पोजल ग्रुप तो है बट डिसकंटिन्यू ऑपरेशन नहीं है, तो क्या होगा? What will happen? If it is not discontinued operation, additional disclosures are not required. Like earning per share from discontinued operation, P&L from discontinued operation, this is not required. Only simple disposal group held for sale accounting will happen. Okay. The disposal group is stated at following amount immediately prior to classification as held for sale. Step number 1. On 15th September, the carrying value was given. Goodwill, intangible assets, financial assets, PP&E, deferred tax asset, current assets, current liability, non-current liabilities, provisions. Okay. Then it is total. Then entity A proposed to sell the disposal group at 19 lakh. At 19 lakh. So what is this? This is fair value less cost to sell. So it is given. So at this part, carrying amount is given, which is immediately before reclassification is held for sale. And then the fair value is given, which is 19 lakh. And cost to sell is also given, which is 70,000. This cost consists of professional fee to be paid to external lawyer and accountants. So what is my fair value less cost to sell? $1,830. Okay. As at 31st March 2002, there has been no change in the plan to sell the disposal group, and the entity A still expect to sell it within 1 year of the initial classification. Mr. X, an accountant of an entity A, remeasured the following assets or liabilities in accordance with respective standard as on 31st March 2002. Financial asset, deferred tax asset, current assets, current liability, non-current liability provisions. The disposal group has not been trading well and its fair value less cost to sell has fallen to 16,50,000. So first, the initial disposal group classified as held for sale on 15th of September, right? On 15th of September. Then the standard has given you some information. Then the standard has given you some information. Some information on what? Information on fair value less cost to sell. On 15th September, the standard has given you the fair value less cost to sell of disposal group and the carrying amount immediately before classification is held for sale. And now the standard has also given you some information on the reporting date. And standard has given you the carrying amount on the reporting date also. that when all this amount has to be remeasured as per the respective standard on the reporting date, these are the values. Okay. And financial asset value, deferred tax, current liability, non-current liabilities values are given. PP&E is not given. Okay. Disposal group fair value less cost to sell has further declined to 16.5 lakh. Compute the value of all assets and liabilities within disposal group as on the following dates in accordance with Ind AS 105, 15 September 2001 and 31st March 2002. So please guide me. How should I solve this question? Please guide me. First, at the time of initial measurement of disposal group held for sale, which is 15 September, my value of assets and liabilities are given. Right? This is my carrying amount immediately before reclassification is held for sale. What is my total carrying amount? What is my total carrying amount? 21,60,000. 21,60,000. What is my fair value less cost to sell?
18,30,000.
What is my impairment loss on the disposal group?
330.
330. How this 330 will be allocated? Very simple. How this 330 will be allocated?
2 lakhs goodwill, then
Entire 2 lakh goodwill, then 130.
remaining 1,30 between intangible asset and PPE.
Yes, intangible asset and PPE. Yes. Why not on financial assets?
Already at fair value, sir.
It is already at fair value and it is outside the measurement. It is outside the measurement aspect of Ind AS 105. Deferred tax asset, it is as per Ind AS 12 outside the measurement aspect. Current asset outside the measurement aspect. Current liabilities and non-current liabilities are not required to be. So this will not cover under for impairment purpose, right? Okay. So 330 part is clear to everyone. Is it clear to everyone? So what is the value of the asset and liabilities on 15 September? So as on 15 September, the disposal group should be measured at 1830, 19 lakh minus 7 lakh. The impairment write down of 330, 2160 minus 1830 should be recorded within profit from continuing operation. The impairment of 330 should be allocated to the carrying values of the appropriate non-current assets. Okay. Then this is my asset and liability. The goodwill has been completely impaired and intangible asset and PP has been, 130 has been allocated in the ratio of 930 to 1020. And these are the revised carrying value as per Ind AS 105. Revised carrying value. Okay. So the impairment loss is first allocated to goodwill and then pro rata to the other assets of the disposal group within Ind AS 105 measurement scope. Following assets are not in the measurement scope of the standard, like financial asset measured at ICAI, deferred tax or current asset, right? In addition, the impairment allocation can only be made against asset and is not allocated to the liabilities. Okay. Is that clear to everyone? I hope it is completely clear to everyone. Yes or no? Yeah, now coming to the carrying amount of the asset on 31st March 2002. So whatever is my value of the non-current asset disposal group, whatever is the value of my disposal group held for sale, which is 18,30,000. This is the value of 1830, right? Where goodwill is 0 and intangible asset after impairment and PP after impairment is this much, right? Now, what are the changes in the value to 31st March 2002? What are the changes? क्वेश्चन में दिया था ना 31st March 2002 की वैल्यू दी थी ना क्वेश्चन में, लिखा था ना फाइनेंशियल एसेट बिकम 4,10,000. So what is the value of the financial asset now? The financial asset is 360. Financial asset is 360. So it becomes 410. So 50,000 value has to be increased. Has been increased. Okay. So deferred tax, financial asset, liabilities, these are the value which is increased or decreased. For all other assets which is not in the measurement scope of Ind AS 105, right? So now, what is the further impairment? From 1830, it becomes, how much it becomes from 1830? 1830 से क्या बन गया?
16,50,000.
16,50,000. So
50,000.
what is my closing balance of the disposal group? What is my closing balance? What is my fair value? So on 31st March 2002, what is my fair value as cost to sell? 16.5 दिया था ना, लिखा है ना 16.5 lakh. From 18.3 it has gone down to 16.5. What is the total reduction of the disposal group?
Two lakhs.
18.3 minus 16.5. 2 lakh.
1,80,000.
1,80,000. Yes, 1,80,000. 18.3 पे तो आपने रिकॉग्नाइज किया है डिस्पोजल ग्रुप हेल्ड फॉर सेल को रिपोर्टिंग डेट पे. अब वो 16.5 का हो गया, तो फर्दर इंपेयरमेंट कितना हो गया? 1.8 लाख. बट आउट ऑफ 1.8 लाख,
1.80
आउट ऑफ
lakh.
1.8 लाख, 1.2 लाख, 1.2 लाख तो ऑलरेडी दूसरे एसेट में भी हो चुका है ना रिडक्शन. 1.2 lakh is a reduction from the other asset. 1.2 lakh has already been reduced, right?
Yes.
So what is the remaining reduction? Remaining reduction is 60,000 only, which has to be allocated to tangible, intangible asset and tangible asset, property, plant and equipment. And these are the revised carrying values per Ind AS 105 as on 31st March 2002. As on 31st March 2002. Is it clear now? Is it clear now? वो तो पूरे डिस्पोजल ग्रुप की वैल्यू है ना 16.5, और डिस्पोजल ग्रुप के अंदर बाकी एसेट्स भी तो हैं. The other assets are also there in the disposal group, right? So the total reduction is to 1.8 lakh. Out of which 1.2 lakh belongs to the financial assets, deferred tax asset, and the current liabilities. Okay. And the impairment is 60,000 on the other assets. Okay. And the revised carrying value is like this only. I hope this question is clear to everyone. I hope this question is clear to everyone. So friends, I have completed 5 comprehensive questions from the shared questions by Board of Studies. And I've also completed 1 comprehensive question which includes the reclassification from PPNE to held for sale and held for sale to PPNE again, which is a change in plan of sale, right? I have covered that part also. So if you have any question, please ask me. I will be happy to answer that question. And let me ask some multiple choice questions also. An entity can continue to depreciate an asset even if it classifies it as a non-current asset held for sale. True or false?
False.
False. Asset classified as held for sale must be presented under the appropriate asset head with a separate disclosure in the note. Is it right?
No.
So what this question is asking, for example, there is a PPE classified as held for sale. So whether this PPE classified as held for sale has to be clubbed with PPE only in the balance sheet with the disclosure? Answer is no. The asset classified as held for sale has to be separately presented, right? It has to be presented separately in the balance sheet. Okay? For example, this is how you will present non-current asset classified as held for sale as a separate line item in the balance sheet, separately from other non-current asset and other current asset. Okay. Okay. Yes. Under Ind AS 105, an entity is committed to distribute the asset. or disposal group to the owners. That is, the asset must be available for immediate distribution in the present condition. The distribution must be highly probable. Available for immediate distribution in the existing condition. Distribution must be virtually certain. Must be reasonably certain. Virtually certain. What is the right answer?
Okay.
A is the right answer. It has to be available for immediate distribution in the existing condition, and distribution must be highly probable. Next question. How to measure a non-current asset or disposal group which ceases to be classified as held for sale? Means there is a change in plan of sale. What were the two conditions? So whenever you are reclassifying from non-current asset held for sale to a normal asset, you have to measure it lower of what?
A.
Lower of
Carrying
held the
value,
asset,
value
lower
and
of
recovery.
what? Carrying amount, assuming this asset was never classified as held for sale, and recoverable value. Right? ये एज्यूम करके आप कैरिंग अमाउंट निकालोगे कि ये एसेट कभी हेल्ड फॉर सेल हुआ ही नहीं, तो क्या कैरिंग अमाउंट होता? पर ऑलवेज रिमेंबर, impairment loss concept is there in PPA standard also. Okay, and we have done one question around that. So A is the right answer. Lower of carrying amount which would have been had the asset never been classified as held for sale, and the recoverable amount. Right? This is the answer. This is your favorite slide. Students, if you have any question, I would be happy to answer. Uppercase, is that clear to you? Prashant, Priyanka, Manish, Resham, Ravi,
Yes, sir.
everybody
Yes,
is
sir.
clear?
Yes,
Thank
sir.
you very much, sir, for your.
Thank you.
Yes, sir. Please.
We,
Thank you so much.
we enjoyed it
Shilpa
very
ma'am,
much.
Shilpa ma'am, would you like to convey any message? Okay, friends, let's conclude the session now. If you don't have any questions, we have covered all the concepts. We have done all the questions relating to the concepts, and we have also done the question in addition to the detailed class, which was there in the YouTube channel. So we have covered, in addition to those detailed class, we have covered 6 questions, right, today to explain the concept of Ind AS 105. Thank you so much. Bye-bye. Take care. Ashok ji, session over. Shilpa ma'am, would you like to convey any message?
Yes, sir. Thanks for giving the opportunity. Students, I just want to ask one thing, and thank you everybody who has filled the form for those IPA feedback, that strategy priorities. Those who have filled and given us, we are really happy that all the students have felt the responsibility and have taken this opportunity on their side. And one more thing, students, what we found from the feedback form, initially we were filling the feedback form, later we are not getting the feedback form for every session. One thing. And second is that there are certain requests which has been received from those students who have given the feedback form. We'll try to take it. But most of the students have only given the feedback form in the form of rating rather than giving their feedback in descriptive form. So we request you all that in case you have any opinion also, that also you can give us. That will motivate our faculty because you are giving good rating to him. But in that case, if you give the description also, it will motivate him also. Okay. Sir, we can end the session.
Yes, ma'am. We can conclude the session.
Okay. Okay, so then thank you. Thank you,
Thank you,
everyone.
ma'am. Thank you.
Thank you.